One of the big questions at the moment is whether the US government or the Fed is about to lose the dollar as a global reserve currency and as a global store of value. And the question I'm asking is not if it is. I mean, it clearly is. We had Lynn Alden recently. We talked about this multipolar reserve currency world. Bitcoin is a growing reserve currency for a certain group of people. It's still small, but I think for everyone in this room, it's probably a reserve currency. We know gold is certainly a reserve currency for people and growing again at the moment. We know there may be other currencies that people consider holding instead of the dollar. The question I really have is that, is there actually a benefit for the US no longer being a global reserve currency? What is the impact of that? Like, have you looked into the impact of it not? Like, what were the benefits of being the reserve currency, and what would be the benefits of not being?
Yeah, so I mean, essentially, the big drawback of and this was predicted back in I believe the '60s with the Tryphon dilemma. Might have been earlier than that, but this economist Robert Tryphon was essentially like any reserve currency, if basically meaning that you have to supply the world with your currency, in this case dollars, you're going to hollow out your industrial base,
which happened
as a result, and it happened exactly as he predicted. It's a form of Dutch disease. Essentially, if you become so good at exporting, whether it's a certain industry, in this case, our industry is exporting our treasuries around the world, then your other industries become less competitive relatively. And so I guess that's exactly what has happened. Our industrial base is completely left. We now rely on China and Taiwan and all these countries for stuff that we really, really need. And so, the dollar as reserve currency has been very good for our financial industry. It's been very good for kind of the coastal elites, software,
tech,
things with kind of with high margins, but kind of that industrial base that America was actually kind of known for is completely hollowed out. And so, over the short term, that kind of reshoring all that manufacturing, it'll be probably painful in the sense that the U.S. and kind of the consumerism of the United States, it's going to be more pricey.
Is there an argument that there's a need for this though, in that one of the things that the outputs of COVID is that people have become less location dependent for their jobs? We know there's now distributed companies that have happened because of COVID. People shut down their offices and not reopened them. And then suddenly realized that people can work anywhere in the world. I mean, Danny's in one time zone, I'm in one time zone, Jeremy's in another time zone, Ben's in our entire team crosses the planet. We're in different time zones and it just works. And a lot of people have figured that out. And in figuring that out, it's like, well, I don't have to have a office in the West Coast of America with engineers costing $300,000-$400,000 a year. I can actually recruit engineers around the world at a lower rate. Is there any argument that the software and the financial the roles in the financial industry have been affected by this, and therefore there's a need now to start bringing back manufacturing in? I'm trying to imagine, are there scenarios where people want this to happen? Because it almost feels like, especially what Jerome Powell said about moving to a multi-reserve currency world, is there an incentive to do this?
Yeah, I think in terms of political incentives, it's tough because the incentive structure for I guess even really all global politics, but if you're thinking about the United States and election cycles, it's very short term. The incentives aren't very aligned to plan for these long term kind of things. So it's tough. I mean, Powell's comments on the reserve currency and the potentially being multiple reserve currencies was very telling. With all that said, I think the U.S. dollar is still, despite talks with China and Saudi Arabia coming out today about oil trade for yuan, stuff like that. That's very that's the long term significance of that is real.
What came out today?
It was I didn't even read it in full, but it was Wall Street Journal article about Saudi Arabia and China talking about energy deals in yuan.
Wow.
And so China exports or imports about 85% of their energy. So just in terms of being China's obviously they have they export things all over the world, but they don't have energy markets.
Yeah, and so people listening, we've just got up on the screen. Saudi Arabia is in active talks with Beijing to price some of its oil assets to China in yuan. People familiar with the matter said a move would dent the US dollar's dominance as a global petroleum market, mark another shift by the world's top crude exporter towards Asia. Interesting.
Yeah, and so I mean, essentially, the reason that the U.S. financial markets have been just so globally dominant, whether you're looking at like treasuries or also just like equity performance since the Great Financial Crisis, it's anybody with a current account surplus with energy exports or really anything that it's selling them to the U.S. Well, they get dollars in return, and then what do they do with those dollars? Well, for the longest time, it was just pummel that cash back into treasuries to get a yield. Well, now with kind of that real yield with inflation at 50-year highs, there's no incentive or less of an incentive to buy treasuries that are basically eroding your purchasing power. So what do? They pummel the cash into equities, into U.S. equities, and that was a really big driver of the last 2 years of equity performance. And so the U.S. kind of has this artificially like engorged financial system as a result of this petrodollar dynamic.
Right. Okay. And how much do we know what the inflation rates are in China with the yuan?
Yeah, I mean, I'm not sure off the top of my head, but I do know the data is very. I don't know. I wouldn't say it's too dependable.
Like I say, I'm well out of my depth, but I would wonder: is this China essentially making an offer to Saudi Arabia, saying like we want it priced in yuan because they want to grow the strength of the yuan? They want, with the Belt and Road Initiative, they want to have other countries using yuan as a global reserve currency, or whether this is Saudi Arabia who are nervous about what's happening with the dollar. I wouldn't know. I wouldn't know, but I guess China would face this issue that it is a manufacturing base, but if they want to become a global reserve currency, they're going to also suffer from the Triffin dilemma.
Yeah, I mean, I'm definitely no geopolitical expert, but just kind of off surface level, I think China as a reserve currency is challenging because to be a reserve currency, you have to open up your capital markets and open capital flows. And I don't think that's something that the CCP wants. So it's really interesting because there is no, there's talks of maybe it's the yuan or maybe it's the euro, but there really isn't a viable second option. And for the longest time, post Great Financial Crisis, there was chatter among central banks, the IMF, the World Bank, saying we got to do something about this dollar, right? There's something is broken, and now they're doing massive quantitative easing programs. What's the viable alternative? And there was none. And the reality is that they haven't really figured it out. And Bitcoin at whatever it is, $800 billion market cap isn't globally liquid enough or even close to big enough to filling that role. But increasingly, individuals like you and me, institutions, corporations are saying, no, this is our reserve currency, and we're moving first. But the big boys haven't figured it out or haven't moved yet.
When would Bitcoin be big enough? Does it need to be 10 trillion? Does it need to be 50 trillion? Is there even a number you can put it at?
Yeah, I mean, I would say multi-trillion-dollar market cap. It starts to get serious in terms of being kind of a viable asset class, to take over. I think ultimately it takes, oil, energy is priced in Bitcoin terms long term. How long that takes is up for discussion. And it's ultimately just a total guess. But yeah, I think around $5 to $10 trillion. And ultimately it's going to be probably an order of magnitude larger than that.